This is my weekly episode where I take a closer look at 4 stocks on my watch list for potential buys. Like many of you, I put money to work on a weekly basis, so every single week I'm either looking for new investments to add or old positions to increase my overall portfolio. It's definitely been a crazy time in the overall market, and every single week I'm doing something different, right? Sometimes I'm focusing on mega tech giants that I want to increase my overall position size. Other weeks I'm focusing on ETFs to kind of increase my overall exposure into different markets. And weeks like today, I like to focus a lot on heavy growth stocks that have taken quite a beating, and I believe in the long term of things can provide me with great returns. Unfortunately, we all see the stock market is pretty crazy, and things can definitely continue to go down, but I do believe for those long-term investors, there's a lot of opportunity in times right now, even though the overall kind of comments and overall kind of FinTweet community is filled with numerous bears. Again, I'm not saying this is the bottom, I'm not saying we're near anywhere in the bottom, but I do believe dollar cost averaging into an environment like this can provide with some really great returns in the long term of things. So let's get started with today's episode, but before, let me know in the comments below what are some of the stocks you're planning on adding this week.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So like I mentioned, this week I'm really focusing in the overall kind of growth market, and the first one's actually going to be an ETF, and this is probably one of my favorite ETFs with numerous growth stocks. And no, it is not ARK Investment. This is actually Round Hill Ball Metaverse ETF, ticker METV. And some might be like, Jose, you lost me here with the Metaverse. This is not something that's going to happen anytime soon. And while that is true, if we take a closer look at some of the top holdings in this portfolio, you can see why I'm super excited to be owning it. We can see giants like Apple, Nvidia, Meta Platforms, Microsoft, Qualcomm, Tencent, Autodesk, and even C Limited. These are all positions I'm super excited about. So kind of purchasing this ETF that hits all these numerous markets and all these different companies, I believe it's a no-brainer in the market like now. The second one is a heavy software stock, and this is one that I've always wanted to invest in it even prior to its kind of public offering, and this is Unity Software, ticker U. We can see right now the market cap of this company is roughly $8.7 billion. I do want to say with Unity, anything below 10 billion in my opinion is a great opportunity. I can see numerous tech giants throwing their wallets at a market cap of less than 10 billion to kind of acquire this company. I don't think an acquisition is coming anytime soon, but in my opinion, if a big tech giant is willing to purchase the stock at these prices, so should I. So for those not familiar with Unity, this is a game engine that's being used to develop some of the best mobile games, some of the most popular games we all know and love right now. Their solutions hit numerous markets like digital twins, automotive, film, architecture, government, and aerospace, and so much more. Unity has definitely seen numerous headwinds with the overall market. Most importantly, their operate solutions which deals with a lot of kind of player acquisitions, advertisement, and their own kind of personal issues that they have kind of experienced have really caused this market to go down. I do believe Unity is going to continue to grow in this operate solutions, and with its recent kind of merger agreement, I do believe this is going to be a very strong market for this player. I'm super excited for Unity's future. Again, numerous headwinds, but with the market cap of less than 10 billion, this is definitely one on my watch list right now. Also, if you are enjoying the episode so far, make sure to hit the thumbs up as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. The third company is another software company, but this is dealing one in the cybersecurity space. This is Crowdstrike Holding, ticker CRWD. Right now, the stock year to date is down roughly 26%, and this is pretty strong, right? We've seen numerous software stocks down over 70, some over 80%. CrowdStrike is in that cybersecurity market, so it's definitely holding that strength, but I do believe this is another player, another leader that can provide long-term returns. If we take a closer look at its most recent earnings, which presented August 30th, we can see their annual recurring revenue grew 59% year over year. They continue to add new net subscription customers to their platforms, and they are positive in cash flow from operations. They also have a very healthy balance sheet, and in their most recent earnings, they also even raised their full year fiscal 2023 guidance. That's the type of company with great balance sheet, great cash flow, great revenue growth that you want to see in the market that we're in right now. Also, again, being in the cybersecurity space, I do believe there's numerous opportunities here as numerous big players are also focusing in this space. The final company I want to take a closer look at is one I actually did a video on yesterday, and this is a mega giant. This is Alphabet, aka Google. Right now we can see year to date is down over 33%. the advertisement space has definitely taken quite a hit, especially with the overall kind of macroeconomics we're seeing right now. In my mind, these are just short term, maybe in the next few quarters, but in the long term of things, I do believe Alphabet is going to continue to be a strong player in this space. I mean, even with the overall macroeconomics, their overall advertisement platform still grew over 10% year over year in their most recent quarter. And like I said, I did an episode on it yesterday where I explained a little bit more why I'm bullish in this company. But again, for long-term investors, I do believe this is a great opportunity for us. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.